Officer from Agent Plus Realty, your specialist in Florida real estate.
I'm Ted Beinhorn from Nexo Mortgage. We're an independent mortgage brokers. We have over 1,000 mortgage brokers in the country, and we're one of the leading brokers to provide financing for all types of real estate.
Thank you, Ted, to be with us today. And I have one very important question for you that all the time my buyers are asking me. So let's go for 6 questions the buyers always ask.
Great.
First one, they want to know what type of rate do you have to offer them?
Well, Batanya, first thing, it's important for everybody to understand that rates are standard in the industry, okay? So what does that mean? The rates are set by prime rate, or what they call LIBOR. And then the banks or the lending companies, they add a margin to it. So everybody should know that. In the beginning, everybody starts out the same, and then everybody adds a little to it to make a little money. But those rates can be affected by many things.
The rate comes with points?
Yes, it does. So what does it mean? Okay. Points are like fees. So when you see that, oh, I'm going to borrow money and I have these rates, then what I have to do is, if it comes with 3 or 4 points, you can buy down those points. And when you buy down those points, it will lower the rate. But it can actually be a good thing.
It's going to be a fixed rate or adjustable rate? What exactly is the difference between both of them?
Oh, great question. First thing, that everybody likes the idea of fixed, because what it means to be fixed is that over the length of the mortgage, you're going to have the same payment month after month. You're going to have the same interest, and you're going to know exactly what every month's going to bring. Now, that's great if you're going to stay in the home a long time. Some people think, well, I may, move after a few years. So what they do is they may want an adjustable rate. What does it mean? It means that for a period of time, let's say 5 years, it's called an ARM, an adjustable rate mortgage. For the first 5 years, it's the same. And then after that, the rate may fluctuate, which means your payment may go up or down. So depending on what your own financial position and depending on how long you'd like to own the property can dictate the kind of mortgage you want. Okay,
and how can you lock the rate?
Excellent. In these trying times that we have today, we see interest rates go up and down. Now, it's good that most of them are down for all the buyers or for people who are refinancing a home. So what happens is when somebody comes and they get pre-qualified and they're getting close to making a decision on a home they like, then what we do as lenders is we lock the rate in for them. And that lock can be 30 to 60 days. And what it means is that while they're shopping and making their final decision and closing, if the rate goes up, it's going to stay the same for them. However, please make sure that when you're shopping for a mortgage that you may find out there may be a fee to lock in. So always ask the lender. And the second thing, it's always good to know, is that if you get questions that if the rate goes down,
yes,
can you get out of the lock and lock it at a lower rate? And the answer is yes, but there could be a fee for that too.
Oh, okay. And how about the private mortgage insurance? Do I have to always have a private mortgage insurance or not?
Well, and that's when we get that question, you don't always have to have it. You're right. In fact, some people get it mixed up, like they said, well, I'll get my own property insurance. Well, you have to have that anyway, okay? But if you're going to put less than 20% down on the home, the lenders are going to require you to pay a private mortgage insurance. And that's done because what will happen is that if they ever decide to sell the mortgage to somebody else, it protects everybody's interest in case there's a default on the mortgage. So, but the good news is this, is over a period of time, when you have 80% or more equity in your home, as you get more, the private mortgage insurance goes away.
Oh, okay. And what rate can I expect now at this time and during pandemic?
Well, you know what's great about that is that, let's take for instance FHA.
Okay.
Okay, the FHA mortgage is the Federal Housing Administration provides you a program, especially good for first-time home buyers that may not have the best credit score and may not have a lot of money to put down. So right now, that rate is 3.5%.
Oh, good.
And it's really good.
3.5%.
Right.
It's a very
with a
good
very
rate.
low down payment, and you can start off with FICO score as low as 620.
620. Okay. To get a loan, to get a mortgage, do I have to go to a bank?
Oh no. And I'm so glad you asked that question, because as an independent mortgage broker, when we have over 90 lenders to choose from. So banks, very good for what they do, but they can only sell their product. You know what? And I tell realtors, Natanya, what if you could only sell your listings? And
Well, it's going to be tough because there is, a lot of listings, a lot of opportunities in the market, right?
Right, and that's the same thing with lending.
Okay.
There's a lot of opportunities. So it's good to go to an independent mortgage broker and to get pre-qualified. And during that period, that mortgage loan officer is going to help you find the best product for your situation.
Basically, the loan officer is going to be working for the borrowers,
Exactly.
looking for the best option, the best lender. So,
Exactly.
okay,
Great.
great, thank you.
Oh, my pleasure. Thank you for having me.
See you soon.
Thank you.